Scott, stock market losses almost are always temporary unless you screw it up. Okay. And if you screw it up and actually realize a loss by selling in a down market, then you know that, and I think all the way back to 1926, you can look at any kind of pullback we've ever had in the market. Those stocks, in large cap stocks, growth companies that we prescribe for people to have in their long-term portfolio, those stocks have always rebounded. They always have recovered losses and went on to big new highs. But here's something for you to think about, very, very pertinent in this day and time, is that when you think about the fact that stock market losses tend to be temporary, ask yourself what tends to be permanent. Well, what tends to be permanent are purchasing power losses. You think about that. How many times have you ever seen prices go down?
Yeah. Not any.
They don't.
Or for a short time, maybe.
Right.
For a month or two.
Maybe a month or two or something like that. But in general prices of things always go up. That's the inflation rate. We're seeing higher inflation now, and we are assured that it's going to cost more tomorrow than it does today, whatever item it basically is. So you've got to have the ability to have your money keeping pace with inflation, because inflation is permanent. Stock market losses are really very temporary.
Well, and let's distinguish between stock market losses and your investments, because, guys, I think a lot of times, again, going back to what people are listening to, and we'll just call it their news feed, whatever the source may be, they're listening to what is the market doing. Okay, but what are your investments? Because your investments probably don't look exactly like the S&P 500. Your investments should be more diversified than that. So while you're hearing the report of the markets, what's your market doing?
Everybody probably saw, a lot of people probably saw this commercial. I think it ran during the Super Bowl. It had, I think it was Matt Damon on, and they were advertising crypto, and they were saying the fortune favors the brave.
Yeah, guy in outer space taking the big step. You know, that guy's brave.
Yeah,
how's that working out now?
Yeah, how is that working out now? I would say that you need to change that phrase. The real phrase needs to be, and this is backed up by history of the markets and what have you, is that fortune actually favors the prepared and the patient and the diversified. If you look at where we are in the markets and in the economy and that type of thing, fortune favors the prepared, the diversified, and the patient. Now, what do we mean by prepared? We talked on the show last week about the fact that if you've got cash, you got plenty of income coming in. It's not like you have to sell something and create a realized loss in the market. Look, markets are going to go up and markets are going to go down. That's how you actually get the good returns over time that you get in the market, is that you are taking risk and you're getting rewarded for that risk. If you are just thinking about this in terms of, absolute return and making progress all the time, you're just not going to get that in the market.
Right.
And any other place that you do make steady progress over time is probably going to be very low return, because the risk reward quotient is in there.
Want more content like this delivered to your inbox weekly? Visit fastest4.com to learn more.